We have an awesome panel for you. We're going to do introductions in a minute here, but I'm Christiaan Engstrom. I'm CEO of Bullpen. Bo Wiinberg is here, Chief Development Officer at Novo Nordisk Foundation, Cellerator. Daniel Friedman is here. He's with BroadOak Capital Partners. Irene Rombel is here. She is an advisor to 1315 Capital, 1315 Capital. Okay, we don't have to spell it out. All right, let's give it up. I love the enthusiasm. And Troels Jordansen is here from KELI Therapeutics. So one thing we're going to do a little differently is interrupt us at any point if you have questions. And I would ask that the Facilitate team members just interrupt me if we have a question. It's more important that we get the questions out here. So let's get that going. I'm going to sit down and I'm going to moderate. We're going to start off with introductions. So Troels, can you take it over?
Absolutely. Good morning, everybody, and I hope your feet and toes have warmed up since you arrived. My name is Troels Jordansen. I have been in tissue engineering, cellular therapy, etc., since 1996, when Genzyme Tissue Repair started selling Epicel and CAR-T-cell in Europe. And since then, I've been the founder of a few companies and worked for others. Very excited to be here and look at all the people who got out of bed early this morning to come over here. When we started in the last millennia, it was not that many people. But lovely to be here, and as Christiaan said, let's get as many questions as we possibly can.
Good morning. I'm Irene Rombel. So I'm really excited to be here in Dallas because this is where I got my first grown-up job, coming as a postdoc from UC Berkeley to being an assistant professor at UT Southwestern. And the reason I came here was to do very cool science in an invention center at UT Southwestern Medical Center. So I was working on DNA vaccines 25 years ago, before it was a thing, before synthetic biology had a name. So love cool science, but I also discovered 25 years ago that cool science is not enough. And in fact, to paraphrase one of the people this morning, I'd say that great commercial execution eats great science for breakfast, unfortunately. So that pains me as a scientist, but that's the truth. So I'm here today wearing two hats. So my day job is I'm the CEO and co-founder of Biocurie. We're developing a scalable AI-driven software platform for cell and gene therapy process development and manufacturing. And I'm also here as an advisor to 1315 Capital, which is a private equity firm that invests in rapidly growing businesses in the services and tools sector for cell and gene therapy and other advanced biomanufacturing.
Hi, my name's Dan Friedman. I'm a principal with BroadOak. We are a life science tools and services focused investor. Been around 15, 16 years, and one of the groups that's entirely focused within that space. I largely cover our tools investing, as well as a lot of our cell and gene therapy investing. Exciting to be here and see the growth of this event in the pre-day. But yeah, it's nice to be here.
Hi everyone, my name is Bo Wiinberg. Come from Denmark, Copenhagen, and very surprised to experience that Dallas is much colder than where I come from. I would have experienced the opposite, so luckily I checked the weather before I left and packed a very, very warm jacket. But very, very happy to be here and to be invited to be part of this panel and others as well. I represent the Novo Nordisk Foundation. We have been supporting the stem cell area for a couple of decades actually, but primarily in basic science. And then over the years, the strategy has changed a little bit, and recently there's been an increased focus on supporting regenerative medicine. Specifically within that field, stem cell-based therapies, and focusing on how we can actually help push that field forward for the benefit of the patients. So investing in quite a deal right now in that translational part from really, really great research and getting that into patients. How do we actually do that? And it's fully philanthropic. The Novo Nordisk Foundation owns Novo Holdings. Through Novo Holdings, of course, the Novo Nordisk Pharma Company and 180 other companies. We can get into that later, how the structure is. But the Novo Nordisk Foundation is philanthropic in what we do.
Awesome. Nice to meet you all. A question for the audience, who is going back-to-back this week? Was anybody at JPM last week? Good amount. So this question is kind of on everybody's mind coming out of JPM. We're going to start with Daniel. We're going to ask you, are you bullish or bearish going into 2025, and are we turning the corner here?
As an investor, I think it is both. There's a couple of different factors here that we care a lot about. One is, will we start to see exits in this market again? Will we be able to see the acquirers coming in and actually buying services, tools, and frankly, the therapeutic side as well? I feel pretty good about that. It seems like the indication from a lot of the large players is that that will happen. The second factor here is it a good time to be investing? I also feel pretty good there. So the last few years, we've seen a difficulty due to the financing markets that have flown through our tools and services companies. That being said, there's kind of been a return to sanity, let's say, around the capital efficiency of these businesses. So I think valuations have come back to a reasonable level. Companies are more targeted on building customer-centric products and services and are building things that we believe will give a good ROI both for the investors and the entrepreneurs. So I'm feeling good.
Talk to me a little bit about, because we're talking about investing in this space, and you look deeply into this space. So tell us how tools and services is maybe different than other parts of cell and gene therapy right now, in the long run. Why do you invest in this space?
We like the capital efficient businesses. I'm going to keep saying those terms over and over again, but tools and services generally are less of a binary risk factor, but you can still make technological and longer term trend bets. The tricky thing gets to be when companies are raising $500 million and burning it all really quickly, your churn means the incentives get a little bit misaligned. So the change back to a little bit more sanity there. The reality is these markets don't have a ton of huge exits, so you have to build companies that reasonably can generate returns for the size exit to expect.
We're going to come back to you and ask you a little bit about your portfolio companies and what's happening with them and their funding cycles in a minute. But I want to go to Bo. Bo, are you bullish or bearish?
Yeah, well, I think things are picking up. Let me say it that way. It looks like that there is an increase in activity, at least in the investments that we are doing. We've had quite a lot of investments in the last half of last year. So I see things are picking up. I'm also hearing from JP Morgan that a lot of the more kind of decision makers were present than previously. And to me, that could be a sign that people are also thinking about making some real deals, not just scouting and seeing what's going on, but actually present at some of those meetings to engage for real. The data also that we saw earlier suggests that there is an uptrend. So it looks like it's going in the right direction. How quickly that will go is, of course, very difficult to predict.
Okay, so Irene wears two hats, as she said before. Irene, how do you see it?
I'm actually very bullish, and just, I've seen this from two perspectives. So after being an assistant professor, I actually became a hedge fund analyst again here in Dallas at the Crescent down the road from 2005 to 2010. And that means that I witnessed the glorious years of 2008 and 2009 when the floor fell out of the whole market, and it was like, oh my God. Fundamental analysis went by the wayside, and yet the industry recovered, the markets of course recovered, investors made out like gangbusters, and did just great for about the next decade. So these things are cyclical. So as a rational investor, this is really the time to buy when things, the valuations have come back down. But of course, it takes a certain amount of, courage and risk mitigation. And to Daniel's point, the reason that I started Biocurie is it's a deep tech, tech bio company essentially, is for that very reason. I don't want to live with that binary risk of clinical development, which I have lived through as an investor, as a big pharma person, as a biotech person. So I love the space exactly for that very reason. So I'm feeling very, very bullish.
Wonderful. Troels, how are you feeling?
I'm getting warmer. I am feeling bullish. I don't know if there's anybody here who were in Lisbon about 6 months ago. And we had the same meeting in Lisbon, and in that meeting, at a similar panel, I actually said that from the first half of 2025, things are going to be better. And thank you for that insight, because I really feel that's the case. Like Bo said, it comes out of San Francisco, it comes out of JP Morgan. I'm involved with KELI Therapeutics, who are based in Lithuania, if anybody knows where that is. This little stem cell company will this week secure 2.5 million euros, which would allow that company to get started on acute kidney injury. But I also, like Irene, have another hat. I work with a really strong team at Altius BioVentures out of Vancouver. And just like Dan, we invest in the toolbox that goes into the laboratories. Having raised a lot of money for cellular therapy companies, I have seen them coming in from left and being handed out to the right to the toolbox manufacturers. So I thought it would actually be really great to be a part of that process. And so many products in our laboratories are legacy products. They're really not fit or not optimized for what we need them to do. And that's where the group of people behind Altius Partners, they got together and said, let's try and do something about that. And that's exciting. And I think if we can, together with BroadOak and others, if we can get money into the instrument side, we take out a huge bottleneck from the cell and gene therapy industry, and we'll see new heights.
Okay, so wondering, do we have any questions for the panel at this point? We just asked if they're bullish or bearish. Do you have any follow-up questions on that before I move on? Then I want to go to Bo.
Okay, just one comment to what's said here. I think what we've experienced as well is that, back to the other panel discussion before about the team, that sometimes when there is a good investor opportunity, we're actually lacking the right skills to put into the team to make sure that actually succeeds. It's a good product, it's a good opportunity, but it's actually quite hard to set the team, to find the right people to make sure that it succeeds, because I think you do need to take care of that as well. And so it's not just about the money, it's also about the teams and the people and the skills to actually carry this or pull this off in this field specifically, right?
We're going to hear more about that in a minute. I do want to stay on the whole economy topic. And there are some macroeconomics at play right now. I believe we just had a change in our president. There's something going on in Palestine and Ukraine. We're worried about China. There's interest rates to think about, inflation. What are you monitoring, Bo, as you look to unlock the market and look for this dry powder to be released? What are the macros?
Yeah, well, yeah, we all know what's going on around the world. And hopefully as that settles, but as long as there is that disruption in the politics around the world, that of course makes it much more risky to make investments. And then there is of course a natural trend to invest in some of those more safe things, and I think it's also safe to say that this field is not one of those safe investments. So things will tend to go other places, also within this field about therapeutics and technologies, within the field within small molecules or biologics. Of course, those are the classic investments. But then, of course, as things hopefully start to settle a little bit and we know what the future looks like, hopefully the war in Israel will settle a little bit now. It looks like hopefully Ukraine as well can settle in a little bit. That frees up or gives us a belief in the future. Of course, then, once people then start investing again in some of these things, they will then start to invest in the safe places. And then gradually, hopefully, it will move into some of these more risky investments that this field is. So, and that's why I think it's picking up. It's not quite there yet. I'm not as bullish as you guys are, but I think we're seeing it, right? But I also would like to see the macro politics in the world settle a little bit. I won't comment on Trump, because I think that's a little bit dangerous coming from Scandinavia, but Greenland and all of that, so.
We would have people's attention, at least, you know. and you're not from the States right now. You get to leave. So, Dan.
Maybe.
Dan, what are the macros that you're looking at, maybe applied to LPs as you think about your portfolio?
We have been thinking a lot about the risk factors coming into the new administration. I will give a little bit of a comment on the Trump administration broadly. Regardless of how likely you think it is that NIH budgets or other things will be impacted here, the risk is certainly higher than it was a year ago. That could have a very long tail on it. Whether that's a 10% cut, 20% cut, I don't know what that is on the table, if anything, but there is a true risk factor that there could be a big headwind that comes in front of us this year. That being said, there's other areas that maybe we see some benefits, but we will see where that all flows through. More broadly macro, I mean, for us and our LPs, I don't worry about it as much. I worry about the financing environment broadly for therapeutics and tools and services generally, and yields, that kind of thing has a big impact on it, more so than our LP base necessarily.
Okay, we're going to move more into the operational questions here. Any more macro questions for our two investors?
Actually, yeah, no, I actually, again, feeling pretty bullish, going even from a macro perspective, specifically, you know, we've got a new government, and again, you know, it's not all bad. So one thing is, from a regulatory perspective, hopefully things will look up. From a small business perspective, I think things could get better. I'm nervous about some of the scientific stuff that one hears, depending on who's going to be the head of HHS. We'll see. You know, I think mRNA vaccines work extremely well. I've been a big part of my career on that. So, you know, hopefully things will stay normal there. And one other issue that affects so many of us here, everything from big pharma to small companies, is the H-1B visa situation. So as you can probably tell, I'm a Kiwi, so I came here, you know, J visa, H-1B visa. That's where we get a lot of our, you know, great talent. And in fact, I remember being at a J&J town hall one day and looking around at hundreds of people, and I realized, oh gosh, if it wasn't for immigrants, this would be a pretty empty room. So that's just something to think about.
Just
great comments.
One more comment.
Yeah.
Fear that I sounded a little more negative than we actually are as a firm. We have these strategic meetings fairly frequently. There's a pretty strong view within our firm that this might be like the best vintage for a decade, or perhaps even longer, in terms of time to invest. Again, companies have come back to a state where there's more reasonable expectations. It's more focused around company building, and we're seeing changes back to a normalcy within the financing markets for therapeutics companies. I don't want to sound too negative, because we're actually very positive. We're raising more money to go after this opportunity that's right now.
And do you see more exits happening when? That's what we're all looking for, right?
I'm not the guy to ask, but I will say I did hear, we had a lot of meetings at JP Morgan. A lot of it is introducing our companies to larger, let's say, strategic acquirers in the space, and we did see what felt like signs of more seriousness from an acquirer perspective. So that bodes well. It's still a very tricky market, because the largest strategics have only gotten bigger, and there's not a great middle tier, other than some of the private equity firms that have taken a step back in the last couple of years. So hopefully they come back.
Okay. Any questions for the panel? We have one over here.
Yeah, Troels, you mentioned something about legacy product. Oh, thank you. I don't have to yell now. Troels, you mentioned something about legacy products, and Irene, you nodded your head about they need to be optimized. So if you looked at cell and gene therapy, for both of you, what would be one legacy product that needs to be optimized?
Oh.
Big question, I know.
Yeah, especially from a non-scientific person who has never worked in a laboratory, but have only been signing the checks. One of the things that I am really happy to see happening more and more are closed manufacturing systems. And when you start spicing that up with inline testing opportunities, diagnostics, cell counts, all of this stuff, then you're looking at something really, really sexy, even for a non-technical person like me, because when you start looking at the cost and you understand GMP and you understand you need to have one person looking over the shoulder of another one and making sure they write down the same number. And of course you can get robots to do this in a much better way, I believe, than most human beings, definitely me. So the cost of doing all of this, the cost of QC, it is just staggering, and I really believe it's difficult for payers to understand exactly how this can become so expensive as it unfortunately has to be. So if I may answer you by saying I would like to see the closed system with inline processes, that would be amazing.
Yeah, so I guess as both the technical and the business person, yeah, and I was nodding my head because of the legacy processes that are being used to develop some of these products. Because keep in mind that over the last decade or so, people have generally really repurposed existing systems for biologics. So, you know, cell and gene therapies are not antibodies on steroids. They're a completely different animal, so much more complex and nuanced. And so we need to have new processes, which means new instrumentation, new software, et cetera, et cetera. So there are a few things in our favor. So you mentioned closed systems. So I see that as one piece of the solution, but it's not. You're always going to have complete end-to-end production as well. But within that, you're going to have automation. So people, you know, keep in mind, automation is not synonymous with robotics. Robotics is a little bit different, but automation, I think, is going to become increasingly prevalent. That means that we need to have digitalization. So you would still be shocked at how many companies have legacy systems that are either on paper or using simple Excel that don't even talk to each other. So that is one part of the infrastructure that needs to be changed. To your point about the human beings not only, okay, they're expensive, they make mistakes, they cause contamination, and they're not reproducible. So you have a lot of operator-specific variation, especially for very complex processes. So we've got to take that out of the system. So to your point, automation, but whether it's a closed system or end-to-end, that's both of them are going to coexist going forward. But I think that really needs to be really innovated across the board, that whole paradigm for process development and manufacturing.
So Daniel, I want to go to you. I want to ask you what you're thinking about from a vertical within the tools sector. What is the hot tools and services space for 2025?
What is the hot tools and services space? I'm not sure I have a great answer for what the hot tools and services space is for 2025. My view more generally is that tools and services, there's under-investment in the space. And so when you say hot, there's areas that we're interested in, but I am coming to these kind of events because I want more people to come into our space, and it was frankly part of the reason BroadOak was set up 15 years ago, so there's not a lot of people in this space. The nice thing now, I think, is that, again, markets have stabilized and we are seeing the scientific development of some of these therapeutics, and you can kind of see where they're heading, especially with the way the capital markets are going too. And so building products that kind of, actually these guys were just describing a few of them, that would be great places to play, but I don't think there's going to be places where people are throwing money at you if you're building tools in the space that much.
Well, I'm going to
maybe AI companies.
I'm going to throw my hat in the ring here. I have ran a tools company, and I'll say cryopreservation. We have a lot of challenges within our supply chain to improve post-thaw performance of cells. So that's been a hot area, a cool area, I guess, for the marketplace. Bo, you're thinking about it from maybe a higher level, and you're trying to move your programs forward at Novo Nordisk. What matters to you?
Yeah, so I think I actually agree with what everyone has said. I think it's both specific things, but we're thinking at it, about it from a more holistic point of view. We're actually building a completely new facility in Copenhagen, where we are saying, so what does it actually take to truly develop these therapies in an efficient way. And I think that there are many steps involved in that. And we're trying to think about, so each step of the way, when you're on that journey from something that has proof of concept in animal to the first human trial, what type of technologies do you need access to? What are the right types of technologies? How mature are they? Where do you take risks and where don't you? And just making sure that you have the right knowledge and understanding to make the right choices. I think it is extremely complex. One of you said, it's much different from what we see in small molecules and biologics. So going on this journey for the first time, having a company that's doing this, it's not just about choosing one specific technology, it's about the combination of all of those, right? And knowing when to bring in those individual new technologies that will make a difference for your product, because your product may also be different, have different needs than the competitors or one of the others that is working on a therapeutic, right? So it's a very complex question to answer. I don't think that there's one thing that I would bet on. I think that there are many things that we need to work on in parallel.
Now, Irene, you had a lot of thoughts about this. Do you want to share some?
Absolutely. So, Dan, you mentioned the AI word. So as I said at the outset that, cool science is not enough, and you should always, I'm speaking the obvious, but you wouldn't believe how many people miss the obvious. You start with a problem and then figure out the solution. And so when I saw this problem coming down the pike with advanced therapy process development manufacturing, about 7 years ago when I was at Big Pharma and then at Biotech, I realized, holy cow, this is going to be a major problem that's crippling the industry in a few years' time. And then I thought, how can we solve this? And I've always been a huge, I guess, techie geek, keeping up with all the different innovative technologies. And so I saw this beautiful convergence of the modalities, understanding the biology, the clinical outcomes, the high throughput systems creating a lot of data, and also the maturity, the AI tools before AI became hot. And I realized this is how we can really transform the industry. None of this incremental improvement nonsense, but really something transformative. Now, I'm a biochemist and molecular biologist and more on the business side, so I know what I don't know. I sought out the world leader in AI for biomanufacturing, Professor Richard Bratz at MIT, and he joined me as a co-founder of Biocurie. So we were doing, and he's been doing AI and ML since the 1990s. So we created the company before AI became hot. Because of generative AI, it became hot. That's not even the technology that is applicable to our industry for most applications, just FYI. But nonetheless, it is a hot area. There's a lot of ways to do it wrong, very few ways to do it right. So I think that's, investors have to keep their eyes wide open. Don't just throw money at stuff because it's AI, because there's a lot of...
Irene, I'm going to come back to you in a minute. I'm going to move to the audience first. Raise your hand. Oh, I will come back and get a question from you as well, but raise your hand if you're raising money right now. Don't be shy. I think it's very interesting. I actually wish I could get a picture of it. Maybe one of our photographers can. This room is filled with people raising money, and they have life-saving treatments behind them, and it's hard. I raised a $2 million seed fund a couple years ago in a really down time. And as an entrepreneur, and many of you are Bullpen members, we talk about this deeply, it's distressing. You're worried about your technology, the people that work for you, the patients. It's very, very hard, and you take it home with you, and it's hard to sleep at night. It's something people get emotional about. You have a whole portfolio of those companies, Daniel. What do you tell them when they're going through this? How are we going to survive until it does turn over?
It's a lot easier when things are flat rather than down for 6 months after 6 months after 6 months. So it does feel a lot easier now. That being said, we have a portfolio of 35, 37 companies right now. About half of those are tools. Almost all of those are unprofitable companies that need more money in them and haven't found exits. So it's hard. I think for us, we have always been, I'm going to say it again, capital efficient focused investors, and the goal has always been that you can build these companies without having to burn $50 million to get to an exit. That's a fundamental belief of our firm, and we find companies that align with that. So companies that need $2 million to hit that next milestone and hit the next inflection point for them. It is hard to move from a high cash burning company to a low one. So a strong recommendation to people is start out capital efficient and maintain that culture for your life. But otherwise, it is a very hard thing to do. It's a total culture change.
I'm going to give a shout out to Ben Cromnick at Mercury. In the Bullpen, he says, just stay alive.
Yep.
Just do whatever you need to do, sell services, do licensing deals, whatever you can do to stay alive. And Bo, we had a prep session on Friday, and Irene was wonderful. She set us all up, so thank you so much for getting us ready. But Bo, you had some interesting thoughts about kind of unlocking the market and little pockets of the market and what you see, and doing things that maybe aren't standard to get your seed round done or get that bridge round done. But comment on that a little bit.
I think I agree with a lot of what's been said about, this bootstrapping is of course always something that if your technology is mature enough, that will give you both some cash flow, but it will also, of course, prove to the investors that there are people who are interested in what you're doing. And I think that's very important, that you have the ability to show someone is actually interested in what we're doing and what we're working on, and that sometimes maybe even working with them without there being money involved, but actually working together on products where you show that you have that interest. So that's one thing. I think the other thing that we are seeing in our environment when it's slow is that a lot of the companies have access to soft funding, even though that they are actually established small biotechs. There are in Europe access to funds where they can at least keep it going. And it's not insignificant funds, right? It's like $1 million, $2 million sometimes, right? And that can keep it going for a while, but of course at a lower burn rate. And then the last thing I would say about this thing about when you're looking for money, and I think we talked about this as well, what's your strategy for going out and talking to investors? Do you really truly know who you're talking to? What makes them tick? What they are looking for? And do you keep shopping around, or do you actually stick with the ones where you feel that there is a connection and work deeply on those? Or are you spreading it thin, or are you going deep with specific people? Because I believe more in finding the right investor who believes in what you're doing, and then hopefully they will both commit, but also open their network and drive that investment round. So I think it's also about the strategy, where I would definitely try and find that friendly face that believes in what you're doing, and then really make a connection there.
Well, Irene, I actually want to hear from both of you because you've been successful raising recently. I want to hear how that went. But there were a couple questions out here. Can I go back to the questions? I know I believe you had one.
Yeah. How hot is manufacturing of cell therapies at the point of care? I'm not talking about distributed. I'm talking point of care at the hospital. What technology, tools, and services you think, and how hot they are for the manufacture of the therapies at the hospitals?
Does anyone want to raise their hand and tackle this one? Okay, Troels.
So I've been around for some years now, and when I worked for Jordansen Tissue Repair, we were obviously producing the chondrocytes and the keratinocytes in Boston and shipping it back to Europe. There was a company in Korea called Cellerator. They wanted to build these metal boxes and park them in front of hospitals. And then you should do your manufacturing literally in the car park. And it keeps coming back. It keeps coming back. I think every 5 years there's a new company who's trying to make it happening, and now it's obviously containerized. But I really don't think it's going to work out. It's 30 years ago with Jordansen Tissue Repair. They didn't sell one single unit, even though everybody were very positive about it. It didn't get started. And I think the quality requirements that a hospital have to live up to, as long as there are human beings involved, it's going to be too expensive to do all of this quality control at hospital level and not at a central laboratory. That's just my view, and I'm sure others have a different view.
I agree that this is something that's quite interesting, but it has to be with a twist, right? Celino is coming in with a different approach. So there are companies that are trying to approach it in a different way. And I'll just say this, that if it actually works and you can do autologous at, bedside almost, then that's a game changer, right? If it really truly works, so I'm glad that someone is working on it, but it is a stretch to think that it's right around the corner.
Here we've got 8 more minutes. It's a perfect time for your questions. You've got a panel. Yes.
I'm wondering how you feel about a company, a tool company, that can produce something that you might be able to use in phase 1 and then expand on it like Celino all the way into commercialization. Because when I've had these discussions years ago with investors, they're like, no, it needs to stay manual. We need that opportunity to make changes to it. But what about early stage investors or even developers? Even Mayo Clinic does a lot of early stage work with industry experienced folks, manufacturing. How do you feel about a tools company that has that access to automate it early and then allow that same technology to be used for commercialization? Is that something important to all of you?
It has to be important, and if it isn't important, you're not the right person to look after that. I mean, you see the technology supermarkets of Sartorius, whatever they are called out there, they just keep buying the smaller companies and put together. So I mentioned legacy earlier. At my last company, Glycostem, we were doing NK cells, and we managed to set up a closed system. But we had like 15 different suppliers because nobody had taken it on. So when we had to do our service and maintenance, it was a nightmare, to be honest. So it must be something that can work small scale, clinical scale, and then be commercialized. But let's hear the rest.
No, but I think, coming back to the discussion we had a little bit earlier, I think it's very, very important. What we stress every time we talk to therapeutic developers that are early on the journey is end in mind. It's very, very difficult to change. And we're looking for making the right choices early. And then those choices also include considerations about scalability, right? Because you cannot, when you then have the phase 2, say, okay, I'm going to change my process. Sometimes you can, but in cell therapies, that's going to be extremely difficult to convince regulators that, yeah, it's actually the same product. I just changed a little bit in my process. Yeah, okay, good luck with that. But I think, and my answer is yes, if you can get those technologies in early, and you can actually show that it's scalable and reproducible to a commercial scale, then that's very, very interesting. Of course, very few have made it that far. So that's another thing about, you're taking a risk then on both a technology and a biology. And I just have to say, investors don't like that, right? They don't like risk staggering. So you don't want to combine a new technology with a new biology, but perhaps within, for example, Parkinson's or one of the other biologies that have, progressed pretty far. Maybe in for a second generation product, that would be the right place to test a new technology because you have a very strong benchmark.
Okay, so we have another question.
Hi, I'm Randy Heyer, and I run a small company developing a messenger RNA cancer therapeutic. And I think I couldn't see the audience, but I think there were more hands up here when you asked about raising investments, or who's raising money. And so I want to acknowledge that 2024 was certainly a challenging year, without question. And necessity being the mother of invention, we had to get creative. And we discovered a technique or a strategy where people and family offices or donors could make charitable contributions to charities that would then invest directly in my company at 100%, no take off the top. And I just wondered if anybody's ever heard of it. We were successful last year in raising such an investment. I was just shocked. I didn't even heard of it or thought of it. And it's just another avenue as we have to be creative in these difficult times. I'm just curious if anybody is familiar with that or has any,
Like a trust that donates, basically invests as a nonprofit investment?
Exactly. Yeah, it's very simple. Yeah, a donor or somebody makes a charitable donation to a donor-advised fund or it's an endowment process, and then that fund or the endowment makes the investment in the company and, of course, reaps the reward.
Okay.
Is there tax benefit in that?
Well, does anyone have experience with that? Might be something that we take into the hallway afterwards and maybe have a little group discussion.
Yeah.
I can't opine on that specifically, but I think there is a general comment here around just being scrappy. There are very few investors in this space, and so you've just got to be able to go out and find money where it is. There's a lot of other sources of money out there. Angels are a great angle, but there's other things too, grants, working with strategics, everybody else. That's been one of the messages we've been sending to our companies as well, is if you need the money, just go out and raise it. And it's not, I know it's easy to say that, but there are other places to look.
Okay, so we've got 3 minutes left. I'm going to ask the panelists.
Oh yeah, sorry.
You got another question?
Yeah, one final probably. Tim from Ghent University Hospital. So I wanted to pick in your point on manufacturing at the hospital side. So we do have a GMP unit for cell and gene therapy, and we work with all the major companies for commercial clinical trials, but we also do academic clinical trials. And what I'm always figuring is, why do we see that contradiction? Is there no way of getting that more connected? Because we do all the quality controls, and the ones we don't have in-house, we outsource it to the industry. So that public-private intersection, how as investors do you look at that? That was something I was wondering.
Irene?
Yeah, so yes, there are a lot of academic hospitals, et cetera, and academic institutions doing GMP manufacturing now. Yes. And it's fabulous. The quality is outstanding. The tricky part is that to have a process we can do faithful tech transfer and get an acceptable cost of goods. That's the breakdown really, because here you've got very highly skilled people with PhDs, etc., that do a beautiful job, but that doesn't necessarily translate terribly well to commercial production. So that's really the disconnect. So you need to have that same seamless transition where you've got a process, a robust process that can be readily translated, and where you don't need a whole team of PhD trained people to execute.
Okay, so we've got a minute, and then we're going to move on to Q&A, ask the investors. We're going to roll right into it, but I do want to get a final question. In the Bullpen, we have this mantra, it's find someone to help, repeat. And we always end with our panelists as to how the audience can help you. So I'm going to put you on the spot. We didn't practice this. But Troels, what are you working on that you put out there as an intention to this audience? What can we bring you?
Yeah, warm jacket.
Warm jacket, okay.
So this doesn't sound really nice, I know this, but I'm so old and I have tried it so many times that I actually feel that I have already set up a network of people who I need to get to help me to get things done. And because of those glaring spotlights, I can't see who's actually out there, but there may be several people out there who is already helping me or could help me. But we obviously need to enter into a dialogue, and we need to find out what is it they have that I could need.
Keep helping each other is what you need.
Yeah, I mean, we have to do that. Yeah.
Irene, can you be more specific, maybe, or?
I hope so.
Oh, absolutely. So first, for 1315 Capital, for example, which is a fantastic private equity firm located in the greater Philadelphia region where I'm from. I love these guys. They are great people, very, very, they're very rigorous in terms of their diligence, but also they're great investors. So for companies that have typically about $5 million recurring revenue and want to grow, that's 1315 Capital is one of the few great investors in the tools and services space. Of course, most CEOs in this room are not at that point. So for example, like myself, I've got an early stage startup company. We are a pioneer in scalable AI software. So we were fortunate enough to do the bootstrapping thing and recently closed our first partnership that is revenue generating. So that's success breeds success. So that makes the investor conversations a lot easier. But for me, we're looking just to raise a $3 million seed round. We've got great people lined up already. So my greatest joy is to be able to hire people. So I just hired a couple of great AI ML people from MIT recently. So that's really my passion, is to do something great for patients and great for the future generation.
Okay, awesome. Dan, do you have an ask for the audience?
The biggest thing that I would love to ask is trying to get more money to come into our tools and services space. I think we talk to a lot of generalist or regional investors, and they are probably reasonably uncomfortable investing in the market. If you're interested in investing in this space and looking for a partner, we'd love to play with friends, and we would love you to do your first tools investment with us, and we can partner on it. But it's hard to get over that leap, but I'm trying my best to get some more money into our space.
Bo, last but not least, how can we help you?
Yeah, I think I have the fortunate situation that I'm coming from a little bit of a different place, being philanthropic. So when we invest, we don't invest to make a return on that investment. We actually invest because we want to solve some of those pieces of the puzzle that are not attracting the right level of investment because it's not commercially attractive. And those are out there. So what are those pain points where you see that you're hitting roadblocks, there's not anyone to talk to, there are not technologies or systems to help you solve those problems? I'd like to know about those, because those are the ones that we are trying to get involved in and trying to solve together with the community. And specifically from a therapeutic development point of view, that would be very, very interesting to hear what your pain points are. I have some assumptions, but it's also great to validate a lot of those things and hear them again and again to make sure that we are investing in the right things.
Well, I have an ask, and it's something called an USSI. Have you taken an USSI before? It's like a selfie, but with a group, and we're going to end that way. And what I'd like you to do is make sure you're out on social media, sharing the stories of the amazing founders, technologies that are here this week. You never know when it catches the eye of an investor, and reposting that and telling their stories is a great way to get that done. So thanks, everybody. Let's give them a round of applause.